All right, welcome back to CEO Money. I'm Tommy Havey, and our next guest, let's welcome to the show Meredith Jones. She's an author, Women of the Street, Why Female Money Managers Generate Higher Returns and How You Can Too. I haven't got the book, Meredith, but welcome to the show. I'm going to expect it because I want to read this.
Well, thanks so much for having me.
Yes, welcome. So let me ask you a question. You're an internationally recognized researcher, writer, speaker, and expert in the investment industry with over 19 years experience. Tell me what inspired you to write the book? I guess because of your years of experience, but some people work in this industry forever and they don't want to tell anybody. They just keep it to themselves. Tell me what inspired you.
Well, one of the interesting things about my industry is that I am really in a very large minority. If you look at the investment industry, only about 5% of the people that are professionally taking risk with capital are women. If you look at, for example, private equity funds, only 11.7% of the senior management of private equity funds are women. If you look at venture capital funds, only about 7% of investment partners at venture capital funds are women. If you look at hedge funds, only about 2.5% of hedge funds are run by women. And so I guess I got frustrated of going to conferences and never having to wait in line to go to the bathroom. And so I started to wonder, where are the women? Because the women that I knew in the industry were performing exceptionally well, and yet there continued to be a very small contingent of us in the industry. And so I wanted to look into that performance to see if there was something there that might be sustainable and repeatable and a reason to be more gender inclusive in the industry.
You know, the amazing thing is there are so many few women in your field and in the boardroom and in the C-suites. We do see a trend, a change. It's pretty exciting. Some of these huge companies now that have women running them. Fast Signs is one that is a large company with a woman at the helm. Merv brought me some notes of some of the women CEOs out there that it's the glass ceiling is breaking or broken now. So it's nice to see and recognize what you're doing in offering more and more information for women out there.
Well, the most important thing, I think, is for people to have this information because this isn't a zero-sum game. If there are more women that are involved in the investment and financial world, we will all be richer. And I think that's a really hard thing to walk away from. There's very few things in life that are win-win scenarios, and this definitely is. There's research that shows, for example, that companies that have a higher percentage of female employees generate better returns in the stock market than companies that don't. And that goes across all industries. So even some of the harder industries where you would think that wouldn't necessarily be true, it's true. If you look at women-founded companies tend to create jobs at a faster rate and also were net job creators during the financial recession. Mm-hmm. And so if you look at this, it's not just for investors, but everyone from Wall Street to Main Street would be better off if we were more inclusive. And I can't think of a single person who's not interested in having more money.
Of course not. Now, there's evidence supporting these facts.
Yes, absolutely. So Goldman Sachs actually did the study that I just mentioned about the companies with higher percentages of women actually generate 3.3% alpha over companies that don't. If you look at studies done on small businesses in particular, you can see, I think it was the American Express Open did the study that showed that women were net job creators throughout the recession. There's other research, too. There's a company that invests in in venture capital firms or uses venture capital to invest, and they looked at their portfolio, and the companies that had at least one female founder, they didn't have to be exclusively women, but they needed to be, have at least one female founder, actually performed better. And if you look at research that's been done on mutual funds, for example, Morningstar did research that showed that mixed gender teams had a tendency to outperform. I've done research on hedge funds and private equity firms and have shown that those firms that are run by women also tend to outperform. So there's a host of research out there that showcases these facts.
Okay, so help me out here, because there's no question, and you're bringing up some very, very good facts, but there's a limited of women in this industry, and hopefully there's going to be more, and your information and knowledge and press that you're getting will hopefully drive more women to this industry. But what about the guys that are already in it? How can we tap into that little bit of what are the women bringing that changes the game? Is it something that can be learned by a male counterpart?
Well, and that's part of why I wrote the book. As you'll note, the last part of the subtitle was, and you can too. And that's not limited to just women. There's certainly behavioral traits that tend to make women strong investors, and those traits are innate, either due to biological or cognitive processing factors. But there are things that men can do to implement some tools that will help them to, for example, be better investors. One of the things that we learned about female investors from looking at the research when I was writing the book is that women were less likely to sell their stock positions when the market went south in 2008. They hung on to those positions. They were 10% less likely to sell. And as a result, they were able to capture the full run-up of the market that started in March of 2009. And as a result of that, they actually performed 3 percentage points better than the men in that study. And so one of the things that men can do is to maintain conviction when it comes to investing. Everyone has to question themselves. But one of the ways that men react to stress is outwardly. They want to do something to fix it. And so what's more stressful than watching your 401k start to decline? There's not a whole lot. And so men reacted by trying to be active, and the women reacted internally. So it doesn't mean they weren't worried, but they didn't feel the need to take action to solve the problem.
Meredith, I've got 60 seconds. In 30 seconds, tell me, what could you tell women today to help encourage them to explore this investment industry?
Well, what I can tell you is that you control over 50% of the wealth in the world. The female economy is 3 times the size of the GDP of China. You've got a lot of money behind you, and it's imperative that you take control of your financial future so that you can be secure and so the global economy can continue to grow.
Thank you so much, Meredith Jones, author of Women of the Streets, Why Female Money Managers Generate Higher Returns, and you can too, guys. Go to her website, aboutimjones.com, and pick up this book. It's a must-read. I can't wait for her to get me mine in the mail. Thank you so much for being part of the show.
Thank you so much.